O'Neill Global Advisors. Well, good evening to you, Randy. Thank you very much for staying up for us. First, there is this confusion. You are seeing bond yields and the dollar index in particular rising. We are normally told that is inimical to emerging markets. And yet you have all these positives of Biden going to announce yet another big infrastructure budget. So tell us, what's the prospects for emerging markets from here on?
I think a lot of it comes down on the individual country basis to how the countries handle the virus. Obviously, we're nervous about a second wave in India. The vaccinations have picked up right now. I know that after April 1st, they're going to start vaccinating everyone over 45. So I'm hopeful that we'll start to make an impact. Obviously, you mentioned some of the lockdowns, things like the curfews in Mumbai, et cetera. I do think the Indian market and the Indian economy can recover later in the year as we put some of the virus behind us. But right now, it's a little bit up in the air on what kind of government responses they're going to have to be in the short term and how much that's going to hit the economy. I think that's one of the things that's really causing the recent pullback or weakness in the market.
Okay, Randy, good morning. So you track Indian markets quite closely. What kind of stocks would you buy right now if you're buying?
Well, in terms of India, there's a lot of stocks we still like. In fact, we have more Indian stocks on our focus list than we've ever had before. So we feel great long term about India. As I've said to you before, obviously last year not a great economic year for the country. GDP down about 7.5%. That's the worst I think in about 40 years. We're more optimistic looking at this year. Growth is estimated to be in the double digits, hopefully in that sort of 12 to 13% range. And I think as the economy recovers, there's a lot of areas that are of interest. We like certain growth stocks. One of the names we like, which is a little bit on the smaller side, is we really like Affle, which is a technology company that provides end-to-end digital ad serving for corporations. That's a very rapidly growing area in India and really around the world. That company should be able to grow its revenues over 25% the next couple of years. And then we like some bigger stocks also. We really like Vinati Organics, which is a leader in specialty niche chemicals. I do think that industrial production and manufacturing are going to improve in India as we move through the year. So I do think there are plays to be looked at there, like you talked about on the opening of the show.
Okay, so Randy, good morning. You spoke about Vinati Organics, right, and Affle India, two companies that have done really well. Within the technology space, since you like Affle, does it even make sense to put more money to work in some of the larger technology companies? TCS, for example, last week became, the first IT company to revert back to a salary hike because of the way demand has improved. Anything in that space that still catches your eye, either in large cap or mid cap IT?
One of the things I've talked about with you all before is, we still like Infosys, right? More than half the business is coming from digital services. The order book is very, very strong. We think they can grow their earnings in the high teens. They're a market leader. Outsourcing is going to continue, especially as we move through this pandemic. And so I think that's a name that you can still buy and hold for the next several years. We don't think the valuation is really extreme. So that's a name that I continue to come back to and like. I know that large cap stocks in India have lagged very dramatically small cap stocks, right? If you look over the last year, the Sensex is up about 66%. If you look at small caps, they're up about 120%. I think some of these small cap names are maybe getting extended, and there are large cap names we still like. We still like Reliance, which is going to benefit from energy prices rising and is also doing well on the telecom side where ARPU's been rising. And unlike most Indian stocks, it's actually trading at a price earnings multiple below its growth rate. So I do think there are some large cap names that have lagged here where there's an opportunity maybe to get into some at some more reasonable valuations.
Okay. Well, Randy, you took away my next question. It was going to be on Reliance also because today there's a slight positivity because there's likely to be an anti-dumping duty on PET, the raw material for PET bottles. But Randy, I wanted to ask you about this steel versus automobiles issue. Steel companies in India are apparently going to raise prices even further come April. And this will be obviously difficult for auto guys to pass on completely, it looks like. So do you like both sectors? Do you like either of them?
So that's a great question, Lada. Couple of things. Auto sales have been kind of disappointing in India the last few months. I'm not really sure when that turns around. I think it turns around at some point later in the year. But when you look at basic materials and things like metals, and in particular steel, right now there's a price gap between domestic and imports. And I think as a lot of these economies reopen around the world, there is going to be price pressure on inputs. So I actually do like the steel stocks. I know they've done well. I think JSW is a very interesting name. So I do think there's going to be commodity inflation, and I think the steel companies are going to benefit from that. That could result, as you hinted at a margin squeeze for the autos. So I would actually err more on the side of the basic material companies right now than I probably would the auto sector.
Okay, Randy, what about some of the state-owned companies, for example, State Bank of India? Any thoughts here?
As you said at the open, financials haven't been doing great. I think there is going to be pressure on financials as rates continue to rise. I think there is going to be inflation. I think that's going to be something all these central banks are going to have to deal with. We look at both fundamentals and technicals. Technically, we're not that enthusiastic about what's happening with a lot of the financial charts. If I had to err towards one, I'd err towards HDFC bank. But right now, we're really looking for more leadership, and the banks right now aren't really leadership. So we're kind of on the sidelines there, waiting to see better price action before we get involved.
Okay, just one final question. I don't know if you track it, but there have been so many new listings in new spaces, right? Nazara Tech, the gaming company, lists today. So that's one space that's happening. Last week, you had a specialty intermediates company, Laxmi Organics, that listed. So that entire ecosystem is doing very well. Anything that interests you in these couple of niche pockets?
I don't have any off the top of my head recent IPOs that I really love. A lot of these names have come out at pretty good valuations. They've been carried along with the whole small cap bias that's existed in India as well as in the US. And so I feel like a lot of those names are a little extended. So I'd probably be waiting and trying to pick my spots later in the year. I feel like the small caps have outperformed large cap by so much. I feel like there's got to be a little bit of a makeup trade with either the small caps coming down a little bit or the large caps catching up a little bit.
Okay, just final question. Randy, help us understand what's happening even in the US and global markets. Every now and then we get one GameStop end January, and now you get an Archegos end March. And yet, of course, the bulls have soldiered on. What should we be prepared for?
I think there's a couple of things going on. So what's going on is first, people are looking ahead to much better corporate profits this year, and I do think that's going to happen. Second, there's been so much liquidity put into the U.S. market and into global markets by the central banks, and now by fiscal stimulus in the U.S. We just put through a $1.9 trillion stimulus bill, and now we're talking about a $2 to $3 trillion infrastructure bill following on that. All of that capital, some of that is going to seep into financial markets, and you're seeing that. It's probably going to seep into some commodity markets as well, and you're seeing that as well. Look how much oil is up, for example, year to date. So I think there's an awful lot of liquidity that's driving everything. If you look at where the Fed is right now on rates, and you look at what inflation is forecasted, you actually have negative real rates right now in the United States. So all of this stimulus and easy money is really affecting financial assets and driving them up. I think going forward in the U.S. at least, what's going to happen is I think the valuation expansion period of the market is over. I don't expect the P multiples to expand in the U.S., but I think we're going to have such a good year for corporate profits as the U.S. vaccinates its population and opens up the economy more broadly. But I think in the intermediate run, corporate profits are going to make up for a shrinking PE, and I think the U.S. market probably has one more big leg left in it before this cycle kind of slows down. It should be a great year for profits, and at the end of the day, that's what investors care about the most.
Okay, well, Randy, thank you very much for speaking to us, giving us a perspective on global markets, EMs, and India, and a bunch of even micro stocks. Thank you so much.
Thank you. Stay safe in India. Hope to talk to you soon.
Of course. Let's take a break on that note, and then we'll have our entire research team with us to tell us